Ladies and gentlemen, welcome back to the Crypto News Podcast. We are buzzing as always. Beautiful afternoon in Buenos Aires. This is going to be a bang of an episode, and we have hosts and guests coming in from, I'm going to say, undisputed, two of the top 5 best cities in the world. Buenos Aires, and my guest is coming in hot from the Big Apple, New York City. And he also gave me a little trivia about the Big Apple. And for our Canadian friends at home, the Toronto is supposedly called the small potato.
Big potato.
The baked potato. The baked potato.
New York is Big Apple. Toronto is Big potato. Hopefully,
yes, Big Apple.
We're both from Toronto, so this is not meant to offend anybody. We mean it with love.
I love it. Okay, intro time. Iggy Ioppe on the show today. Love the name as well. Chief Investment Officer at Theo, a gateway connecting on-chain capital to global markets via institutional grade trading infra. Previously, he was co-head of Polygon Ventures and managing partner at Procul Capital, a fintech and Web3 focused venture firm. Earlier, he served as group head of proprietary investing at Credit Suisse and held investing roles at Sureview Capital, Vinik Asset Management, and Bain Capital. Also, BS in mathematics from McGill University and the MBA from Harvard as well. What a bio. McGill is one of my favorite unis in the world. Montreal is an elite city. Iggy, welcome to the show, my friend. Pumped to have you on. How you doing this lovely afternoon?
Fantastic. Thank you for having me. Excited to chat and learn from you. You always throw interesting facts and insights on your podcast. So I'm hoping to learn a few things too.
I appreciate that, mate. Hey, here's not a fact or an insight, but one thing I love, and I've told my girlfriend this. I don't know when I first really loved this phenomenon per se, perhaps not a phenomenon. I love when someone has first letter of first name and first letter of last name, the same letter. I love that. My name though, my last name, my surname Zahab, makes life a little more difficult. You know, I'm sort of hooped for options. Girls, what can you name your girl? Zara, Zoe, for guy, Zachary, Zane. You know, I don't have many options, but I love that your name starts and well, not starts, but starts with the with I and I. That's elite. You ever thought about that, or is that just a weird mad thought there?
Yeah, no, that's the initials look interesting, especially with the letter I and the dot. There used to be a company called I2 Technologies back in the .com era. You know, it was one of the big high flyers back then. But yeah, so the Z in the era of yellow pages, people would pick a business name that was like a AAA, carpet cleaning or something. So, fortunately now we're there's been a few eras since then, let's just say. So, with the Z, you would have been picked last in the yellow pages.
I mean, I was last for every little school thing. You name it, I was last. But I love my last name. Shout out my dad and my mom for taking my last name too. Okay, let's jump into it. You've done some incredible things. You're one of the few folks who've been on the pod who's sort of seen it all come first circle. You've held some very high level TradFi jobs. I haven't asked this question in a while. You clearly were and still are a chiseled vet in the finance world, Iggy, and you left very high-level TradFi jobs to go join the big bad world of crypto. It always seems like it's difficult, but seems like a no-brainer. Walk me through that thought process. Was there ever a moment where you had to tell your family, tell your parents, your friends, hey, I'm leaving my cushy TradFi job to go work in crypto land? Like, what was that whole process like?
Yes, so I think people, my sort of friends and family, they always assume that whatever I'm doing is super interesting and sort of intellectually challenging. So never had even a single person sort of raise. In fact, they're all like excited. They're, oh, you joining crypto? I should look more into it, type of thing. I first learned about Bitcoin in 2011 when I was running prop trading at Credit Suisse. And I had big desk and I had 3 execution traders, 1 for options and 2 regular. One of the traders brought, the idea of Bitcoin. And I immediately loved it because I was also at Credit Suisse during the global financial crisis. And I remember that weekend when Lehman went down, all the senior MDs were called in on the weekend to go into the office on Madison Square Park, the famous building, and basically figure out what the exposures were to Lehman and to other banks, because every investment bank was going to basically go out of business. And
so it was the movies were like literally same as the movies. You were there.
It was very similar. Yeah. So in my case, I was running the long short fundamental book. So all my assets were, kind of a tier 1 assets. So there was no issue with pricing. They were all like, centrally cleared. But a lot of the other groups that had, swaps and kind of things that are OTC, they really, it was very hard to figure out exposure, right? Because basically, like, every bank owes every other bank $1 trillion, right? And it all nets out to like, $1 billion plus or minus, because they're like fine tuning it all the time, right? Actually, primarily for like reverse repos. But if you don't trust the other trillion, it's suddenly, instead of like having $1 billion liability, have $1 trillion liability. And it means like the whole system just goes crashing down. And that's when I learned about blockchains, it was very clear that if that was on blockchain and you had the visibility and you had the atomic settlement that you have on blockchains, that crisis, now there's a few nuances there, but in general, that crisis would have been much less likely to happen. Also on blockchain, you have much more visibility into leverage and then clear rules about liquidation. So you might get liquidated, you might get ADL, right, as we saw on 1010. But again, like, everything basically worked according to the rules. And like different prop dexes, for example, had different preference. Some of them, lighter preference, they're traders, or hyperliquid preference, the LPs. Yep. But at the end, everything worked as people expected. And you could literally see when you trade on prop dexes who you're trading against and what your likelihood of being ADL is, what your likelihood of being liquidated is. You can make your own calculations based on the vol of the assets that you own and whatever. So it's a long-winded intro. 2011, I loved it because first I thought the blockchains were a better way to sort of, especially, wire institutions to each other, right? Internally, you have your centralized ledger, that's cool. But externally, then you either have to trust the other party, and the trust broke down during the Lehman crisis, or you need to trust the system where you don't need to trust anybody. And then also I like the Bitcoin because the money printing was starting, and the idea of having money that's independent of any government was super interesting. Now, I said soon after that, Bitcoin got adopted by, drug dealers and shady characters, and it became Silk Road, and then hacks, Mt. Gox, people losing it. And then I lost interest for several years. I said, okay, well, this is for criminals. This is not, I'm this blue chip guy. I have no interest in this stuff anymore. So loved it first, hated it then. And then later on, after Ethereum came around, and you could see the smart contract, you could see DeFi Summer happen. And then it's like, wow, you have literally the money Legos, as we call them. You can create. Yeah. It's an open source, but for finance. And finance throughout its whole history was closed source. In fact, all the financial institutions were very carefully protecting their crown jewels and keeping their secrets and not wanting the world to know anything that they were doing. So it's a completely different way to do finance. And a lot of technologies like automated market makers, just being one of them. You could basically, it would be high cost, but you could spin up a market for almost anything. So then I saw a lot of potential, and then pretty quickly the 21 bubble happened. And then so I was investing, I was running my own family office at the time. And, I didn't see any opportunities to invest in those days, so I kind of set that out. And then after the bubble burst, that's when I started really looking hard. And then when I joined Polygon Ventures at the bottom, because I thought it was a great time to start investing. And then from Polygon,
well said.
I went to Theo. We'll get into that.
Hey, you teed me up. Great segue. Theo, full stack solution. You guys bring all the best of TradFi on chain and an accessible, compliance, high grade security, risk management, compliance, all the things that we love about TradFi. You guys are bringing that on board to crypto. One thing in particular that I find very unique with you guys is your team. It's not a team of, I wouldn't even say I'm young anymore. I just turned 30. I'm a 95. It's crazy to say that out loud, that I consider myself as not a young dude anymore.
By crypto standards,
but I'm not. But
in crypto, it's called a boomer when you're over 29.
Yes. Yeah. Yes. I'm now, as the cool kids say, I'm an uncle. I officially hit uncle status in the crypto world, because you have these 18-year-olds with, 8-figure portfolios. But nonetheless, your leadership team, you guys legit have done it. Big dogs like yourself, Credit Suisse, multiple different family offices, Capital Asset Management, you name it, you've done it. The team is full of folks like you guys. The DGen side of things as well. Walking through sort of the elevator pitch on Theo and how exactly you guys are bringing the best of TradFi on-chain to crypto land.
Yeah, okay, so there's a lot of options there. Maybe I'll start with why I decided. So I've been an investor for, most of my career, right? So I started, just real quick, the background is my first job was at Bain Capital. I was working on buyouts, private equity, back in the day when Mitt Romney was still running the place. Then I went to Harvard Business School and I started a company there called Location Labs, moved to Bay Area, Silicon Valley. We ultimately grew to a few hundred people, sold it for a few $100 million. And then I've been an investor ever since, in tech primarily. So this is the first time that I'm back building. So I got really, really excited about the opportunity. And the reason is, so I always felt that RWA, or real world assets, is the true potential of crypto. And, Larry Fink and a bunch of other smart people, Scott Besson, they all agree. So the potential was like highlighted as early as like 2015, 16, or like papers are talking about, we need to rewire the financial system on blockchain rails. But so at Polygon Ventures, I looked at many RWA projects, and my team looked at hundreds, and then several of them made it to IC, to investment committee. But so in the founding team, I needed to see sort of three legs of the stool. Is they have to be like incredibly good engineers, right? Technical developers, coders, mathematically inclined. Number one. Number two, deep understanding of TradFi and how markets work. And then three, crypto native. So the founding team at Theo, they're formerly quantitative high-speed market makers, which is the smartest people on Wall Street now. Back in my days, it was private equity and investment bankers that were the smartest guys in the room. And now it's definitely the high-speed traders. So I really like that. And they all have very strong computer science background, really talented engineers, and they were crypto native. It wasn't their first crypto project. So I knew the team. I met them 2 years ago before they started Theo. So also there was longevity, and I really trusted them. So that was the background. All the RWA projects I saw up until then, they had two out of these three, right? They would be like great engineers and very crypto native, or they really came from TradFi with good credentials, and they knew crypto, but they were like strictly business gals or guys. So it was almost like Vitalik's trilemma, where in order to do RWA right, you need to have all three, but everybody had only two until the Theo team. So that was why I specifically picked that team. And then on the vision side is what happened in RWA until recently is what we call tokenization theater, where you had this very respected institutions, trillion-dollar institutions, that would take some of their funds, private equity, private credit, T-bills, tokenize them, put them on chain, and then nothing happens. All you do is you issue a press release and you announce TVL, and then stuff sits on blockchain, but you don't use the blockchain. It's not composable in DeFi. It doesn't trade. So that's the tokenization theater. And that was a very important step. So very grateful to these huge institutions that took those steps, because that legitimized the RWA industry. Just real quick, so I think of RWA like there are three phases. First, there was, let's take any asset that we cannot sell in the off-chain world, stick it on chain, and the stupid Bitcoin people are going to buy it. Right. So there was adverse selection there. It would be some random building that couldn't find a buyer, was like invoices, some portfolio of invoice, and you had no idea like who is, what the credit quality is there, like no transparency. So that first phase, of course, didn't work, because crypto people are really smart and they're not going to buy something that the rest of the world has rejected. The second phase is you had these blue chip institutions that came. It was, people all saying institutions, when are they coming? So the institutions finally showed up, and then they started putting their funds on chain. And that's a very valuable, because that legitimized. And at this point, probably about half of like the $1 trillion institutions have already tokenized some of their stuff. And we're working with some that have never done it before, by the way. So hopefully it will be the first or one of the first, even for the banks that banks and asset managers that haven't been in the spotlight for that. So that's the second phase. And then so Theo, the reason I was so compelled to become a builder again is Theo's working on the third phase, which is to take them beyond issuance, right? To actually get them trade, create liquidity, make them composable in DeFi. And then this full stack, it's kind of, I hate words like full stack, but the reality is you actually have to think about what does it take to get them to trade, right? Because Theo, we're entirely focused on what happens on chain once you tokenize something. And there are a few elements there which we can go through. But, thinking about each of those elements and getting the technology and the capital that you need in order to actually get them to trade. And frankly, also like the crypto native knowledge. So let's say like briefly, it was the people, the right people that had all the three characteristics. And then two is the vision, which is that RWAs are ready for the third phase, which is let's put, tokenization theater out of business and actually get these things to be really used on chain.
So how do we? I love that. What a great way to set the table. Nice tight white linen cloth down. Plates are perfectly plated. Cutlery is locked and loaded. We're ready to eat.
Getting hungry.
Give us the food here. Yes, we are hungry. We are ready to eat. How do we go beyond issuance? This is, and I do agree with you here. And just looking at your cap table, getting Selene involved as well. Selene is on a generational heater right now. They have literally called Jesus. Literally, they're on an absolute generational run right now. We can get into them later, but how do you go beyond issuance? And I could be wrong, and I don't like putting words in people's mouths, but I see like a lot of people invest in you guys because they understand that you're one of the few teams that can actually take RWAs, take those assets, and take them beyond issuance. How do we go and do that?
Yeah, so there's a few layers in the stack. Usually, it's easier to show visually. But first is connecting to liquidity venues. So Hyperliquid is of course you go there first. But now they no longer have a monopoly, right? So you have this Cambrian explosion in perp dexes that they're all fighting for volume, which is great for the industry, right? When you have this sort of productive competition, some of the volumes are probably fake, but some of them are real. So I think net the volumes, there is a much higher volume in perp dex. And if you look at after 1010, the volumes are actually just as high as they were before, and they're way higher than they were 2 months ago. So that was really a blip on this kind of a secular growth trend of perp trading. And of course, perp trading drives spot trading as well. So basically, you have to be crypto native enough to know where liquidity lives. Some brand new perp dex. So the first step is connecting and making sure that our RWAs, our tokens, are available in all those places. So for example, we have a proof of concept token called THBIL, which is basically U.S. money market fund on chain. And that's with partnership with Wellington Management and Standard Chartered. These are both, 100-year-old institutions. And then we partner with Standard Chartered tokenization subsidiary called Libera. So they're done tokenization, and we do the on-chain stuff. So within, I think, 8 days after launching THBL, we were already on 4 chains and 15 different DeFi protocols, which is like, I looked at other tokenization projects before in the previous years. It would take a few months after the press release just to integrate with one chain and no protocol, just for it to sit there to start. And then sometimes the protocols 100%. Don't even come. So the key is we have expertise in terms of really launching DeFi very quickly and knowing where to go, where liquidity lives, and connecting with especially the latest and greatest, hottest ones like a lot of the dexes on Hyper EVM, for example, or HIP3, which allows you to launch your own perp dex. We are going to be there as well. And we're going to power RWA trading for other perp dexes. It needs to enable them to compete with each other, because how do perp dexes differentiate themselves? One is, sort of the trader experience, but the best way is if you have assets that nobody else has, assuming those assets are desirable. Obviously, the RWAs we're launching are desirable because it's U.S. Treasury bills, it's gold, it's leading stocks. So if one perp dex has them, the other one doesn't, that gives them a competitive advantage. So there's the gold rush of this perp dex trading going on, perp trading in general, and we're aiming to be the blue jeans provider, right? Just like back in the day to that gold rush. So we can get more into it. So that's the first layer is knowing where liquidity lives, connecting to those venues, having these fast, cheap, efficient connections. Second is market making. So obviously our founders have market making background. That they can do it, half asleep. So we have proprietary algorithms that are going to make market in those assets. So starting with THBL, which is kind of, again, it's a very simple risk-free rate. But once we launch tokenized gold and stock, that's going to get much more interesting. And having capital, so we are going to have separate vaults with visibility into a few $100 million of TVL and vault pipeline, primarily out of Asia, that's going to provide capital for this strategy. Right now, THBL is about 100 million. It's because it's a proof of concept to make sure that the rails work with real numbers. And
Hey,
by the way, though, we reached 100 million within I forgot exactly when, but within like less than a month, I think, of launching and without doing any marketing. And it's also kind of a boring product, which is just a risk-free rate. So in terms of the growth of TVL, we're one of the fastest growing RWA protocols. And not to jump ahead, but in terms of volume, we're trading $8 to $15 million a day. Just on the T-bill, just on 130 million or so of TVL. So
wow.
velocity is what I call velocity is trading volume divided by TVL. We are, I believe, the highest among all RWA projects. And considering our TVL is going to grow and velocity will grow. So we could be on track to be the number one by trading volume among all RWA projects within a few months. And that's our North Star, right? We're not chasing to have 2 billion or, maybe 2 billion we could get, but we don't have 10 billion of TVL that nothing happens there. Even our future token revenue model is tied to trading volume, not asset management or mint redeem. So really everything we do is all about creating liquidity. So liquidity, market making algorithms, capital to power those algorithms. The next is connection with external market makers. Like you said, Selene and many others, they're our investors, so we're very closely aligned. We're very closely aligned with Hyperliquid and prop dexes in general. We're also closely aligned with market makers. So there, again, having fast, cheap, efficient connections to them, allowing them to mint redeem quickly and efficiently, and then just having the relationships so that not only we are providing market making, but also the external parties.
Iggy, you're on a roll. We're going to do a quick ad read and we're going to get right back into it. Again, right after the ad read, I want to get into HIP3, talk about HIP3, which is Hyperliquid's sort of third. Hyperliquid is a multi-headed beast. They've already launched HIP1, HIP2. HIP3 has launched. I wouldn't say it's fully launched. It is, but it's not. And HIP4 and HIP5 are coming out soon. But until we get into that, huge shout out to Prime XBT, longtime friends and longtime sponsors of the Crypto News podcast. We love the team at Prime XBT as they offer a robust trading system for both beginners and professional traders. Doesn't matter if you're a rookie or a vet, you can easily design and customize your layouts and widgets to best fit your trading style. Prime XBT is also running an exclusive promo for listeners of the Crypto News podcast. Use the promo code CryptoNews50, that's CryptoNews50, all one word, to receive 50% of your deposit credited to your trading account. Again, CryptoNews50 to receive 50% of your deposit credited to your trading account. Now back to the show with Iggy. Okay, I'm going to do something that I don't like to do, but this just excites the living shit out of me, pardon my French. So I'm going to put words in your mouth. I don't want to say I've heard rumors, but a HIP3 exchange, a perp dex denominated in T-bills, you guys, like you said, you have the market making skills, you know how to run the float. You run a few teams who actually knows how to do this. This would be incredible. This is something that I would like to dabble in. Is this something that's on the back burner or something that might be coming out soon? A HIP3 perp dex exchange denominated in T-bills?
Yeah, so I think, again, I kind of like pre-announced something that didn't happen already, but that certainly is something we could do, and that's a wonderful concept. Like in general, so there's like 300 billion of stable coins out there, which are obviously a revolutionary product, like, if you're in Argentina, Turkey, like country with a super high inflation, that allows you to at least not lose. But in a way, those people are getting screwed because they're not getting the risk-free rate on their money. So all the, so like if, Scott Besson said stable coins are going to 3 trillion, like over time, all of that should go to T-bills or something similar, some kind of a low risk yield product, because you might as well take the free money, right? So at HBS, our finance professor used to say, if there is $100 bill on the ground, would you pick it up? Right. And the answer is always yes, but that's right now people don't have a chance to pick it up. So I think more broadly in DeFi, you should always use THBL as your sort of way to park your cash as collateral and so forth. I think it's an idea whose time is now. So again, as a user, like I would always rather use, and it doesn't have to be THBL. Of course, THBL is going to be most liquid, most composable, but at the minimum, you should use other money market funds on chain,
Yeah,
instead of a stable coin that gives you nothing.
yeah, well said. Going back to RWAs, you talked a little bit about the different types that you'd like to see. You talked about sort of, I love how you make my job very easy, Iggy. Normally, I tend to set the table, but I was asked and shared, ready to eat here. I didn't have to do any table setting. You did it for me with sort of the brief little synopsis, close notes, spark notes, history of RWAs, what doesn't work and what is now working. Let's get into the future of it. I do think a lot of RWAs will be in the form of derivatives. I think we will be just like how derivatives really do run the traditional finance market. It's a better way to have, not perhaps better, but it gives you more of the up and down side, especially with all the delta neutral funds. That's how they hedge their exposure on both sides. With that being said, the obvious ones, the T-bills, the S&P, SPX, gold, other ores and minerals, commodities. Do you have any hot takes for some nuanced weird shit that we're going to put on chain as well? Or do you think those days of like, oh, we're going to put Pokemon cards and art and all that stuff, is that still going to happen or not? Give me your sort of your TLDR thoughts on the future of RWAs and the weird niche products that we're going to see.
Yeah, so at Polygon Ventures, we invested in some of these projects. One of them took a car. I forgot if it was a Lamborghini or Ferrari that was a $1.5 million car, and then turned it into a token. And then they craned it and put it on a giant yacht as a publicity stunt. So the idea was that it was there. It definitely got a lot of attention. But no, the idea was that you would potentially fractionalize it, which is one of the beautiful things you can do on chain. And then, various people could own a little piece of that car. And then the protocol, it was Lucid DAO was the DAO that was working on that. And then, they would sort of custody the car. In theory, in the future, you could get some kind of a timeshare, right? So maybe you get 1 day a year that you could drive the car if you own a piece of it. So it's a good idea, but it didn't work out. I mean, ultimately, the project, and they also had a watch. They had like a $200,000 watch and other collectibles. And there are other things that I saw in that wave, kind of the 2021 wave. There were dinosaur skeletons and obviously art and other things. So I would say that's still the phase one, using to my nomenclature of RWAs, where you take something weird that either nobody can sell, there's adverse selection, right? Just a bad asset, or you take a really unusual illiquid asset and then you put it on chain and you hope that in the first case that somebody just buys it. In the second case, you're hoping, because somebody would buy it, right? Because in this kind of a collectibles, they do have value, but there the goal is to create liquidity. You hope that you'll have more efficient price discovery. And then, again, once you have price, and you can use those collateral, like you can borrow money against it. So you have this like artwork, you don't want to sell it, but you can borrow money against it to pay a mortgage or whatever. So it's a sound idea, but it didn't really happen because it's actually not easy to create liquidity, right? So that's kind of our mission. We will, live and breathe that vision, and you need technology, you need capital, and you also need assets that are sort of predisposed naturally to be liquid on chain. So the second phase was this global institutions with private equity, private credit primarily. And that was also very useful. I mean, each of those phases was necessary, right? Because it paved the way for the next one. Like, I think it was Isaac Newton said that I stood on the shoulders of giants. So obviously when it's BlackRock and Franklin Templeton, they're tokenizing stuff, then it's easy to go from there because the space is being like completely legitimized and the tokenization tech is in place. So you easy to start from there. So it took me a couple of years. So I thought private equity, private credit, I thought it was good because they're really high quality assets. They don't usually trade except for the secondaries market. Is a secondaries industry and sort of an alternative space. It's relatively high cost. These are negotiated transactions. They're like highly paid people that run those funds, right? So there's a lot of leakage of value there. So in general, they're like not super liquid. So making them liquid seemed like a good idea, But nobody either because nobody really worked on market making there, nobody allocated capital, and also inherently you just didn't have the desire from people to trade it. So it took me a couple of years to realize that in order to succeed with creating liquidity, you have to start with things that already trade in the off-chain world, in TradFi. So treasury bills, commodities such as gold and silver, and then liquid stocks. So that's on our roadmap. Right now we have T-bills that's going to grow. The next is going to be tokenized gold, which is in the final stages. And also, I don't want to I'm not going to name names, but our gold is going to be better than other tokenized gold because it's going to have a yield. So right now, if you want to buy gold, even in GLD and certainly sort of the tokenized gold products on chain now, there is a hidden slippage there in terms of the way that the gold is backed. So that's not even explicit. And of course, there's the min redeem, and then there's the asset management fees. It's actually there's explicit cost and then the implicit cost to own it. In the case of our gold, because we and our partners primarily came up with a clever way to generate yield on it, that actually covers the cost of trading, purchasing it and rolling it, and covers the cost of managing the gold as well. So that already is better. And then of course, because we're focused on creating the liquidity and the trading markets, this gold is going to be much more used on chain. So for example, we're going to launch perps. And then, so again, if you're a young investor with not that much capital, totally makes sense to buy gold with leverage, right? If you're approaching retirement, I wouldn't advise that. But for somebody who is earlier stage, it's appropriate because if you get it right, then you have a lot more capital to compound. Think about the compound interest, right? If you start with, 5x now, right, that means you're going to have 5 million when you retire instead of 1 million. That's a big difference. And if you lose it, then you have a job and you will make some money and then you can invest again. So having perps on gold, I think, is a very legitimate product. And once you have perps, liquidity, people love to trade perps, right? So typically perp has 10x or 1 order of magnitude higher liquidity than a spot. That will also drive volume in spot. And that's a perp, and that has appeal to everybody in the world. And then you have better price discovery. You can, again, lend it out as collateral. You can do all kinds of wonderfully put it in vaults, all the things that were invented in DeFi. So, starting with assets that already trade in TradFi is more realistic because it's easier to piggyback on the liquidity that exists in TradFi. So treasury bills on our roadmap next is tokenized gold, potentially silver, other commodities. And then next is tokenized stocks. And again, we're going to be very picky. Most likely what I would, do just, hypothetically speaking, is I would take a couple of stocks out of the Max 7 that trade a lot, like NVIDIA and Palantir, let's say, and a couple of stocks from the crypto universe, like maybe Robinhood and Coinbase. And then really work on each of them individually to make sure that they're listed in all the venues, all the perp dexes, spin up the perp markets, spin up the Oracle networks, making sure everything's done correctly, deal with the challenges of 24/7 trading, whereas trading in TradFi for stocks specifically is 24/5. That's not a technical thing that we spend a lot of time on. And then getting each of them right and driving large volumes. So I would say eventually, as crypto grows, and the less liquid things will find their place as well. But for now, focusing on liquid things is the winning strategy.
Iggy, what an epi, dude. This was a lot of fun. I feel like we barely scratched the surface as well. Open invite to have you on for round 2. Before we let you go today, can you please let our listeners know where they can find you online, you personally, and of course, Theo, online and on socials, and drop any news you have coming out over the next week and anything you at our public company, so you can give anything you want, but any news, updates, announcements that you have for us as well.
Yeah, sure. So I use Telegram in the crypto world the most, and it's Iggy VC as in venture capital, so just 6 letters. On Twitter, I'm Iggy Ioppe, which is my first and last name. Theo Network is our projects, our company's Twitter. So we're pretty active there. I'm actually just starting building the Twitter following. So please go ahead and follow Theo Network and me, because prior to that, Polygon Ventures, we had our own we had sort of our centralized Polygon Ventures Twitter. We weren't doing it out of our own accounts. So we're putting content there, and it's going to be more. I'm also doing a lot of these kinds of a public speaking podcasts. I go to Asia basically once a month or maybe even more frequently and have appearances there. So we have Telegram, we have Twitter. It's probably I'm on LinkedIn as well as Iggy Ioppe for the TradFi folks in the audience. And for the announcements, I would look to we're looking to grow along several vectors. One is more product. So that's launching gold, launching stocks. That's going to happen over time. Second is token. We're going to have our own token that's a few months out down the road, but actively worked on. And that's important too because we want to share the economics of the project with our community that's supporting us now. The next vector is partnerships. So we're going to have more partnerships with projects and others. In addition to launching our own project using HIP3, we'll look to partner with others and enable them to trade RWAs. So there's going to be a lot of announcements along all of these vectors, if you will.
I love it. Folks, what an episode with Iggy Ioppe, CIO, Chief Investment Officer at Theo. This was absolute sick pod. Huge shout out to Iggy and the team for making this happen. If you guys enjoyed this one, I hope you did. Please do subscribe. Hammer that like button. It would mean the world to my team and I. Speak with the team. Love you guys. Thank you so much for everything. And back to the listeners. Keep on growing the bags and keep on staying healthy, wealthy, and happy. Love you guys and see you on the next one. Ciao.